Our next guest is no stranger to the precious metals space. After spending nearly 2 decades at precious metals research firm Thomson Reuters GFMS, he went on to found his own metals firm. Joining us now is Phil Newman, founding partner of London-based Metals Focus. Phil, good to see you again. Thanks for being on with us.
You too, Daniela. Pleasure to be here.
Well, let's talk gold. The metal has had quite a run since we last spoke in October, Phil. After seeing its best quarter in 30 years, where do you see the price moving from here? Any forecasts?
Well, I think, like many other people, we do believe that the bear market is now over. We think that prices will start to or continue to improve over the course of 2016 and, in fact, beyond this year as well. But I think when you're forecasting gold, I mean, you mentioned, when we last spoke in October, prices were still pretty weak. We were still in the middle of a bear market. So I think you've got to be a little bit cautious. So from our point of view, we think that gold over the next couple of months could weaken a little bit. But we think perhaps by the end of this year, by Q4, we could be trading around 1350 US.
Wow, quite bullish, Phil. Now, one big factor affecting gold prices, as you know, has been U.S. monetary policy. You called it a moving target. We've seen that with the mixed comments from Fed officials on when the next rate hike will be. So what's your take on it?
Well, I think you put it just perfectly there. And I think that's one of the reasons why we could have a bit of weakness in the short term. We do have bursts of hawkish comments by some of the Fed presidents. And when you think back to the bear market, especially in 14 and 15, it was the end of QE, and it was concerns about or uncertainty about what the Fed would do with its monetary policy. And that's why we had the dollar strengthening and gold under pressure. But if you fast forward to this year, many would think, and we would tend to agree, that the Fed would have to take a very dovish stance in 2016. We think perhaps no more than 1 or 2 rate increases, and that ultimately will be good for gold.
Well, I know your firm released its annual gold-focused research report earlier this month. So what were some key findings? Was there anything that really stood out or surprised you?
Well, I mean, there are a number of things in there. I mean, the first one was that last year, gold mine production at another record high. And this year, even though it's dipping down a fraction, it's basically plateauing at a very elevated level. What else was there? On the jewelry side for 2016, even allowing for the strike in India, which is just about coming to an end, give or take, we think 2016 will be a decent year for India, following on from gains last year. And then conversely for China, 2015, some weakness on the jewelry side, no surprise given the weak economic backdrop. And we think we could have a bit more weakness this year. So when you combine 2 years of strength for India and 2 years of modest losses for China, the two could be neck and neck by the end of this year from a jewelry point of view.
Well, also want to get your thoughts on silver, Phil. As gold kicked off the year to a great start, silver seemed to lag behind, but it seems things have now turned the corner. And with the gold-silver ratio now dropping to levels last seen in December, are we going to continue to see strength for silver here, you think?
I think ultimately, yes. But even though you're absolutely right in terms of the ratio dropping, but it's still remaining elevated levels. And we think really it got perhaps pushed a bit too high. And that's the reason why investors did come back in, perhaps in March, in terms of the ETFs and other investment vehicles, seeing that perhaps silver was a little bit oversold. So we think over this year, again, silver, the ratio should decline a bit. And therefore, gold will be pushing higher. That will drag silver up. But also we think that silver will outperform gold a little bit as well. So we're relatively bullish on silver for 2016.
Good thoughts, Phil. Thanks so much for being with us today.
Pleasure.
And thank you for watching. Stay tuned. We've got one CEO commenting on OPEC's no oil deal and what it could mean for gold up next.